Welcome back, everyone. My name is Nigel Schroeter, and I want to thank you all for joining us. Please don't forget to like, subscribe, and hit that share button so that other people can get this great information. If you are new, please don't forget to hit that subscribe button so that you can get more information on how to turn your dreams into reality. All right, so today we are going to be talking about how you can purchase a home at a young age. So, say you're currently a teenager, or maybe you're 18, 19, 20, and you're interested in purchasing a home, but you just don't know what process to go about to get it. I'm going to go ahead and give you guys the information on what should be kind of your ideal method to work with. So, thing number one is going to be to get a job. All right, now, if you're younger and you're watching this video, I recommend to say at least um, by 16, 17, if you're planning on buying a house when you know you're 19 or 20 years old, you're going to want to have a job already, because most jobs are going, or most lenders are going to want you to have a job for at least 2 years before they give you a loan. Now, there are certain exceptions that they can do. However, typically most lenders are going to want to see 2 years of work history. Now, the next thing that you're going to want to do, once again, you're younger, you're trying to build up um, yourself so that you can purchase a home. You need credit to purchase a home in most cases today. So I recommend getting added on to a responsible and trusted person's credit card as an authorized user. Now, another thing that you can do is, if you have someone who's willing to, you can always go and open up a secured card in their name that graduates, have that card, use the card appropriately, wait for it to unsecure. You'll still have that money. So by the time that you're old enough to get a secured card, if you're not old enough to get a secured card, you can actually take that money and secure it again and have your own secured card. It'll help yourself out, it'll help that person out, and it'll also mitigate losses to where that person may be more willing to trust you if you show the responsibility in putting up the money up front before you open the account up. Now, the next thing, you want to start building your credit as soon as possible. You want those primaries reporting as quickly as you can. So basically, what you're going to want to do is open up primary accounts as soon as you turn 18. Once again, in certain situations, such as certain car lenders, as well as, of course, student loans for college students, you're able to open those up before you turn 18. So by the time that you turn 18, you already have established a credit score. Now, once again, you can open these loans up, you can pay the majority of them off, and you can defer them and keep them open for a while. And then once you get towards your home purchase, you can go ahead and pay off that remaining balance. And that's going to allow you to still have the credit history, but also have no debt reporting on your credit report. Now, another thing that I'm going to recommend is you save as much as you possibly can. All right, if you can save 50% of your income or 70% of your income, go ahead and save as much as you can. If it takes saying, okay, I'm going to live with my parents for a while, I'm going to do this or do that, remember you're making a short term sacrifice for a long term goal. So save as much money as you can. All right. My next tip is going to be to pay any bills and all bills that you may have on time. Now, if there becomes a issue where you're having trouble with paying a bill on time, maybe there's an issue with a pay date or anything, You should already have some savings because, as we talked about, you're going to want to save for this process. However, if you don't, you can always call into the creditor or the bank or whoever it is that you owe and ask them for a payment extension. It's better to communicate before you make a late payment, because if you communicate before, sometimes you can avoid it affecting you negatively and any penalties that may come along with it. All right. Now, the next thing, of course, is going to be the loan itself. You're going to have to go and get pre-qualified and then pre-approved for a loan. So, what I recommend is, if you live in an area where you can use an FHA loan, that is great. If you live in an area where you can use a USDA loan, that's great as well. All right. Remember, USDA loans are more restricted than FHA loans. However, USDA loans allow you to have 0% down on the house. They will finance 100% of the mortgage. FHA will finance 96.5% of the home costs. So when you go into a FHA deal, you're only paying 3.5%. And then if you're going to get a FHA loan, what you should also do is look into down payment assistance programs and see if there's a possibility that you can still get a FHA loan, but you can get some type of grant or someone to assist you in paying off the initial down payment on that loan so that you're still at a 0% down. Now, lastly, it's not going to be your hottest option in this market, especially with as many houses as there are on the market and the housing shortages and all the other things. But depending on how the market is going, by the time you plan on purchasing a house, you can ask the buyer to pay the closing costs. Some loans will do it. Always look out and ask your lender. However, you can always ask and see if the buyer would be willing to pay the closing costs to lock in the deal with you. And last but not least, I want to go ahead and throw in some bonus tips. So, one thing that I always like to make sure I make as explicit as possible is that when you are going through this process, you do not want to quit your job. All right. You really don't want to quit at all because they want 2 years of history to show how you're making your money. However, if you do quit, it's always best to secure your new employment before you leave the first job. So when you leave one job, you basically transition right into the next job and you're not going to show any gaps in pay. All right. When you leave, I also recommend that you try to leave for a job that's paying the same or more. And typically you want to be in the same industry. Once again, different lenders have different rules, but for the majority of the lenders, they want the jobs to be in the same industry. And it's, of course, always better if you can show more funds coming in because you can lower your debt to income ratio. Now, the next thing, in the case that you're set on doing a conventional loan or FHA loan, and you may not qualify by yourself, be prepared and try to have someone, a trusted individual that you can use to co-sign if it's necessary. Remember that you can have a co-signer and that person not be on the deed of your property. So just because someone co-signs for you, it does not mean that they own your house if you do the paperwork correctly. All right. And of course, you want to also make sure that you're not making any large purchases on your credit report before you go to purchase a house. So a lot of people will tell you when you start building your credit, to go and buy a new car or something like that, make some type of large purchase. Oh, buy furniture, buy a car, buy this, buy that. You don't want to be making these large purchases, especially not for installment loans, because those installments are going to appear in your monthly debt to income ratio. And when they calculate for a mortgage, they're going to calculate your monthly debt to income ratio. So you could end up in a situation where your monthly debt to income ratio is already being eaten up by your car payment, so you're not able to qualify for the house that you want, and that could have been the difference. Once again, you can go back and you can purchase that car after you get the house, but I always recommend focusing on the home first. And lastly, if you're not approved as quickly as you would like to for a home, you can always still go out and look for alternative financing. All right. And one way that you can do that is asking the seller if they will allow you to either take over the mortgage or pay them monthly installments to purchase the house, in either a lease to purchase agreement, or a seller finance deal, or however you all structure and work your deal. So remember that there's always another opportunity out there if the banks will not approve the deal. So as always, thank you guys for watching. Thank you all for tuning in, and we'll see you guys in the next one.